We are so glad you could join us here on a Monday morning. I'm Marlon Bowling with you, your tour guide to the ag commodities. I am joined this morning by Brian Hoops, and he is the president of Midwest Market Solutions. They have offices all around the Western Corn Belt and throughout much of the plains. And Brian, always a pleasure to get to visit with you. I understand off of the wire just a moment ago, USDA said we had another export sale to announce. I guess it would be of the overnight variety. You call it a flash sale in this case. And this time around, Brian, it was more soybeans. It was 132,000 tons. That seems to be a very popular number these days. And the buyer was completely unknown. One of those mysterious things again. Brian, how many days in a row would that be now of some soybean sales?
Well, good morning, Marlon. We're looking at 8 consecutive days. I think the first sale that we had made was August the 6th. So every day since that time frame, every trading day, the USDA has posted a private sale announcement. So as we look at our totals from last week and this morning, we're up to about 1.4 million metric tons. It's been rumored that China has bought at least 1.8 million, so that we have probably some more sales to go in the upcoming days. So we are continuing to be optimistic that we'll see more sales announced. We assume these unknown destinations will eventually be changed to China, and that's what's giving us some strength. There just isn't that much news out there to trade right now. Pro Farmer Tour kicks off this week. Trade will be closely watching what's happening with the tour results. NOPA Crush comes out today, so trade will be watching that, especially for soybean meal and soybean oil. And other than that, we're looking at weather and growing conditions as your main features for the trade this week.
So just fractional weakness in the corn market overnight. If we look at our quotes provided by bar chart, you have December new crop corn down a half cent at 572.5, right in the middle of our trading range overnight. Now those soybeans you were talking about, we had November trading 8 1/4 cents higher at 13.73 1/4 when we wrapped up the Globex trade overnight. That'd be about a nickel off of our high of the evening, but it was off of its overnight low by about 13 cents. A little bit of strength showing up there, and I will admit, I noted when the Globex trade opened up last night, soybeans were about 4 lower, and it was very interesting to see how it turned around again by morning. And one had to wonder what was in the hopper as far as export activity or some sort of business, and sure enough, here we have found out this morning. Now, when we look at the wheat, in Chicago wheat, we have the December contract 6 3/4 cents higher, and it was trading at 7.81 per bushel. Now in the Kansas City market, you had December currently trading at 7.58 1/4. That would be 3 1/4 cents higher. And moving on to Minneapolis, you had, let's go with December here, 5 higher at 9.34.5, and that would be about 2.5 cents from our high of the overnight trade. By the way, in that cotton market, we had the new crop December contract just 4 points higher all by itself at 94.36. All the other months just slightly weaker over there. So, Brian, we're going to pause for a quick little break right here, and then we're going to come back and we'll talk about the overall market realm. We'll include some of these outside markets, some of the equity trade, and their correlation to our livestock markets as we move into a new trading week. We'll talk about that when we come back. We're talking with Brian Hoops of Midwest Market Solutions. We have a whole bunch of stuff to consider here, Brian. Not only what's going on with the grain trade, and of course, like you mentioned, we have the Pro Farmer Crop Tour that'll be kicking off today, and we'll be getting some updates from that tour off and on throughout the week here. So we're looking forward to that as well. Now, Brian, what's going on here with the outside markets, the money markets, the dollar, the Dow? In fact, we can take a look at what the Dow did overnight here. And we have so much turmoil going on, for example, in Afghanistan right now. The Dow looks like it's down 108 points overnight on the September futures. The U.S. dollar index, just to get people updated there, it is pretty flat, but just a little bit firmer in the overnight trade. Last I could check on the gold, we had September $5.40 higher at 17.80.90 per ounce. And in the crude oil market overnight, we had September down $1.99 and October down $1.98. So almost a $2 drop in the crude oil trade. That puts the price all the way down into the 66s for a barrel of crude oil right now. Is much of that going to have anything to do with what's going on in our livestock trade? Because it does have a reflection on disposable income, does it not?
Yeah, especially, we're talking about what happens with the stock market and the Dow, affecting what happens in the cattle market on that disposable income that you mentioned, and consumers going out to eat, buying steaks at the retail level. Certainly what's happening in Afghanistan, I think, is affecting the crude oil prices this morning, dragging them lower. There's a lot of fear of what could potentially happen down the road. So certainly that is something that bears watching. You mentioned the U.S. dollar being a little bit firmer. Now, last week we had rallied and turned lower, kind of an outside reversal one day. And at that top was a possible double top on the charts from a previous week. So that is something that I think would be certainly beneficial for grain exports if the dollar would top out and start to turn lower. Seasonally, we do peak out and turn lower and drop through most of the fall until we get to late October, early November timeframe. That would be beneficial for not only for our livestock exports, but also for our grain exports. And that's something that we are certainly talking about with our clients.
Well, on the live cattle trade, when we wrapped up last week, we finished up the week's trade with October 37 lower at 128.12, but I'll remind everybody that the far out deferreds for next spring were actually at least 20 cents higher. So there was obviously some spread trading going on in that cattle market as we wrapped up the trade on Friday. And the same thing in the feeders. We had September 47 lower Friday, but October was up 15 and gosh, January was up 67. So that was quite a spread change right there between those two. And in lean hogs on Friday, you had the October contract a nickel higher, but December up 27 at 80.17. Are we starting to see volume shifting out of the October now, out into December, or is it too early yet?
Yeah, it's a little too early. We'll see that affect another month or so. We start talking about Goldman Roll type spread trade. It was a pretty strong week last week for cattle futures as well as the cash markets. Cutout values, of course, just on fire. Had a very, very strong week, but it was higher weekly closes for the futures market. Cash trade baselines 121 this week in the Southern trade and 198 on a dress basis. That was last week's trade, and that's what we're watching this week. See if we come in steady to higher. And right now, those are the calls steady to better with the support coming from the box beef cutouts.
And those choice cuts that you referenced, they were $6.90 higher again on Friday afternoon. Selects were up $7.71. Those choice cuts at $324.83 would compare to the week before when they were $296.26. So isn't that crazy? That's almost a $30 gain in 1 week. Brian, great information. Thanks for joining us this morning. Appreciate it, sir. Brian Hoops of Midwest Market Solutions. We're about ready to get rocking and rolling here on a Monday, Tammy, so fasten your seatbelt. We're about ready to go.